I'm Kelly Vaughn, and this is Inside Indy. It's a new year, which means we have new tax reform, new codes, everything's changed. And we have an expert in the studio who's going to help us get through it all. He is the author of Today's Guide to Retirement Planning, and he is David Hayes, the author of the book co-authored with Doug Hughes.
That's right.
Okay, welcome to Inside Indy.
Thanks for having me.
Okay, I'm going to say right off the bat, I don't know anything about taxes.
Well, we say I'm glad because that gives me a job.
There you
yeah,
go.
right. So we're excited about the new tax law. We've been getting ready for quite some time, and now it's here. So we've been excited about the planning opportunities. We're glad it wasn't retroactive for 2017. It would have made it very complicated.
Yes, I was wondering, were they trying to do that initially?
Initially, but they just ran out of time. So on December 22nd, when it was actually signed into law, there just was no way, shape, or form that they could have made it retroactive.
Right, okay. And I'm glad about that. So walk us through it. Let's talk first about our paychecks.
Sure.
Okay.
Yeah. Well, we went from, we had 7 brackets, we still have 7 brackets. The difference is 5 of the 7 brackets have actually decreased by about 2%. So immediately coming in the next week, as you get your first paychecks for the year, you should see more money in your pocket. Now, why that's important? Because if people have money in their pockets, they might spend that money, and 70% of the gross domestic product in the United States is based on consumer spending. So we're hopeful that that money will make it back into the system, and that will cause economic expansion continuing into 2018.
Okay, so you're saying to expect about a 2% increase in the paycheck?
There's a 2% decrease in the tax rates, and
Okay.
according to recent studies, nearly $4,000 a year is expected on average back into a family's pocketbooks. So it can be pretty substantial.
Okay. Now let me ask you this. The flip side of that is sometimes at the end of the year we would get that back as well. It was just at a different time, not necessarily in our paycheck.
So you may still get a refund, and that's a different point. You have the amount of tax you owe. You file your tax return. If you overpaid into the system, then you'll receive a refund back. If you underpaid, then you pay additional money in April or whenever it is that you file your tax return. So it really wouldn't affect any of your refunds that you've had in the past. It's going to affect your daily or monthly or
Okay, so
weekly
you get more back,
pay.
you still might get a refund.
You may
'Cause
still get a refund.
I think some people are thinking like, well, I get a refund at the end of the year because
Right.
some of us are not necessarily disciplined about our savings. So it's even though people
Yeah,
say,
it's
well,
a
put
forced
that in.
savings.
Yeah.
I understand.
Yeah. Okay. Question number 2, doubling the standard deduction.
Yeah, so they basically doubled the standard deduction. And what that means is previously you would itemize or take a standard deduction. And that's still the case, but previously we would add up all of the expenses like your taxes, your state taxes, maybe the license plates on your car, interest on the mortgage on your home, and some other things. And if that all added up to a bigger number than the standard deduction, then you itemized your deductions. That's still the same. But by doubling the standard deduction, that's going to eliminate most itemized returns. In fact, it's being said that only 16% of returns filed in 2018 will actually itemize their returns. So it is somewhat of a simplification act, as well as hopefully money in people's pockets as well.
Okay. What about people who own small businesses?
Yeah, that's where the big windfall is, and most jobs are actually from small businesses. So there's a 20% tax credit, or a deduction, I should say, right against the earnings of those pass-through entities. Now, a pass-through entity is usually owned by a person or maybe a couple of people, and that could be an S corporation, an LLC, where the owner takes distributions. But if I'm receiving a 20% deduction on those earnings, and it's actually capped if you're married filing jointly a little more than $300,000. So these aren't big companies, these are small companies. This could be your lawn care business, your snow plowing business, a small HVAC company. And I think it's going to really be beneficial for those folks because they can now maybe give raises to the employees that you have needed a raise for quite some time. Maybe they go out and invest in more equipment, or they simply have more money to spend. And once again, that goes back to the overall economic expansion.
Wow, okay. What about other deductions? And let's talk about those: mortgage interest, charitable contributions, expenses.
They were very surgical in how they did this. Remember, this was passed under what's called budget reconciliation. So every time we received something, we had to give something back. So as they went through and looked at where they could pick apart some smaller populous populations of people, they started limiting mortgage interest as an example. If you have a mortgage that's over $750,000, then that's the most that you can deduct the interest on your tax returns. If you had a mortgage higher than that, before it was signed into law, you're grandfathered. So obviously that's the higher end homes. And there are some other limitations as well, but for the most part, they have surgically went in and said this small pocket of people that doesn't affect the masses, let's change it on them.
Okay, so if you own a home that's 250,000,
You're fine.
it's the same.
Same.
Oh, okay. Because I thought initially it was something like if you owned your home like for the last, if only it only affected newer homes, but no, now that didn't happen that way.
So if you have a really large mortgage, then you were grandfathered. So that would be $1 million mortgage, let's say. Then you no longer can deduct the interest on your home equity loans. But going forward, if you have a mortgage bigger than $750,000, you can only deduct the interest up to $750,000. So that's the new law. Now, you might be thinking about when you sell your home and capitalizing gains. That rule is still the same. You do not have to pay tax on the gain of your personal residence as long as you lived there 2 of the last 5 years, and it doesn't have to be contiguous.
Okay. Interest on student loans.
Yeah, still deductible, no problem there. That one passed through. We had the child tax credit that was boned up and continues to be part of a good tax plan as well. They did eliminate personal exemptions. So if you, prior to this coming year, whether you took a standard deduction or you had itemized deductions, each member of your home would get a personal exemption. And that was about $4,000. So that could be pretty significant if you had a family of 4 or 5 people. And they would limit the number of personal exemptions you could have. So that was a takeaway. But yet giving you the double standard deduction should more than compensate you for that.
Okay, okay. So what deductions are we losing?
Yeah, some that aren't used very often, like theft and casualty losses. You had a big storm that blew down your barn, or you had someone steal from you. You could deduct those things. Again, doesn't affect.
You could deduct the things that people steal from you?
Yeah, you have to file a police report and go through some things like that.
Is there like an amount that at that time that you could, like, was it a limit or a minimal amount?
Well, yes and no. I mean, it had to go past what they call a miscellaneous deduction amount, which was 2% of your AGI. But forget about it because you can't do it anymore.
Okay, well, I had something happen.
You want to go back and amend and overturn? You maybe still can.
Well, actually, but for last year though, it would still be okay though.
Yeah,
right?
you could go back and sure, for 2017, absolutely. Yeah. Other things like tax preparation fees, investment advisory fees that you pay for managed accounts, no longer deductible. In the past, those were always deductible.
Wow. Okay.
So really limiting the number of itemized deductions, reducing the number of people that will be itemizing, and then hopefully putting a little more money back in people's pockets.
Okay. Trump has said he wants tax reform to help middle-class families. What changes have been made to help American families?
Yeah, there's been actually, in my opinion, quite a few. I think the big deal is the tax brackets. They lowered the tax brackets, but also they've widened some of the ranges that the tax brackets are. For instance, the 24% tax bracket will go all the way up to over $300,000 if you're married filing a joint return. That's pretty substantial. In the past, that same family would have paid easily 28, 33, 35, maybe even 39.6% on that income. So by doing that, it gives folks a lot of opportunity to do some planning, because here's the math behind all of this. At some point, taxes will have to go up. And the reason is because we have too many promises that we've made to the American people, Social Security, Medicare, just to mention a few. In fact, there's a gentleman by the name of David Walker back in 2011 that was on a national radio program, and he was talking about how taxes would have to double for us to simply pay for the things that we've already promised. And he started taking calls about why this might be, and he asked for the callers to call in. He said it was a 4-letter word. Callers would call in, they would say things like wars, kids, all kinds of different 4-letter words. Finally, he stopped and said, listen, folks, it's math. M-A-T-H, math. Now, you might say, okay, there's a lot of people out there that are gloom and doomers. David Walker, former comptroller of the United States of America, served both under Clinton and Bush 1. He knows more about the fiscal health than anybody else in America. So for the next few years, up until January 1 of 2016, 2026, I should say, 2016 was a couple of years ago, we have a really good opportunity to pay taxes on money that you maybe have not paid the taxes on yet, and that's retirement accounts. Retirement accounts are a place where everyone saves money, and they do it on a pre-tax basis. So here's the deal we've made. You can put this money away pre-tax at a known tax rate today, 15% or 12%, 10%, whatever it might be, your tax rate. to then take it out later in life at an unknown tax rate. And if tax rates are going to be higher in the future, then why would you do that? So we've been convincing people to put money away in things such as Roth 401ks, Roth IRAs, where you pay tax on the seed money, but not the harvest, versus paying taxes on the harvest, not the seed. Now, there's an opportunity to do what's called Roth conversions. Whether it's a 401k plan, you can convert money from taxable to tax-free, pay off those taxes now at maybe lower rates than you're ever going to see in your lifetime. So we really see this as an opportunity for middle Americans to pay off that mortgage that's against their retirement accounts. I always tell people, if you have $100,000 in a retirement account, it's not worth $100,000, because if you went and took it all out, you have to pay taxes on all that money. It's worth about $65,000.
Okay.
So if we're able to pay taxes off now at a much lower rate, then that's going to keep you from being a really, really tough situation, in my opinion, down the road, when taxes will have to go up to simply pay for the things we've already promised.
Okay. Okay. Expanded child tax credit.
Yeah, this was one that Senator Rubio actually pushed really hard, and he was the reason that the tax reform went through, because we gave him this. A $2,000 child tax credit is back on the table, and they've expanded that. So, you do still get some benefit from a tax perspective by having children.
Okay.
You're never more broke than the day after you have your first child, so thank goodness they gave us a little bit of something.
Okay, okay.
And the older your kids get, the more broke you become. I have a 17-year-old son. He leaves the lights on in the house, eats everything. They're very expensive.
Okay.
Yeah. So you need the credit.
Okay. The 529 savings plan's expanded. That's the college
That
savings
is,
plan,
yeah.
right?
And that was kind of an interesting thing that came out of left field for me. Now you can use the 529 plan for elementary school, junior high, high school, as long as it's a private school where you're paying out of pocket. The 529 plan, especially here in the state of Indiana, is a fantastic tool. When you make a contribution to a 529 plan, whether it's your own child, grandchild, a friend, a nephew, it doesn't make any difference. You receive a 20% tax credit. That's real money back in your pocket, up to a $5,000 contribution. So I put $5,000 in, I receive $1,000 cash back. That's 20%. That's better return than you can get anywhere.
Wow.
That is now available to be spent not just on college, which they did expand the uses at the college level, but also in secondary school and others as well. You can actually open up I have many clients that have opened up 529 plans with no kids, no grandkids, because they expected at some point to have those. And let's say that you opened one up 10 years prior to having your first child. Well, now you've benefited from that continued tax-free growth. You've gotten many, many tax credits over those years. Then when they're in elementary school, if you're sending them to a private school, you've actually benefited from the growth of that and can use it. It's a great tool.
Okay. Well, we're out of time, David. Very quickly about the tax brackets. I know the income ranges and the
Sure.
that you have listed.
Yeah, before, basically I'll do married filing joint returns, but from 0 to just under $20,000 is 10%. You're now at 12%, up to $77,000, which is a cheap cost of money.
Okay.
22%, 24, 32, 35, and then all the way up to 37% for folks making over $600,000.
Okay, we don't even have to talk about it with nobody in here. It makes sense. You do, though,
Yeah,
David.
no, come on, come on.
Thank you so much for joining us, David
Yeah,
Hayes.
take my book. That's a gift from me to you.
Thank you so much. His book, Today's Guide to Retirement Planning. Thanks so much for coming on and enlightening us about the new tax laws.
Thanks for having me. I really appreciate it.
Thank you for joining us. And we'll be back more here on Inside Indy after this. And we're back here on Inside Indy, and we're going to the movies. Yes, we are. I know you're sitting in your living rooms and your family rooms watching television, but we're going to the movies because we got some movie makers in the studio with us today. Are you all from Indianapolis? You live here? You from Indy?
I live here in Indianapolis.
Okay.
I'm born and raised here in Indianapolis.
Okay.
I live in Terre Haute.
Okay, all Hoosiers. And they have a film based on this book, and I'm going to introduce everybody here in a minute, but this is Submerge, Echo 51, written by John F. Allen, and he's here in the studio with us. Hello, John.
Hi.
Welcome
Pleasure to be here.
to Inside Indy. We also have Demetrius Witherspoon. You are a writer and director of Submerge, the
Yes.
Submerge franchise,
Yes.
the entire franchise. Welcome to the show. And then we also have Grace. Grace Carlton, you're an actress in Submerge Echo 51, right?
Yes, I
the
play
film.
Liz. Yes.
Welcome to Inside Indy. So I'm going to start with Demetrius. Tell us what the film is about, and I know you've won an award for this as well, right?
For the series,
Okay.
we've won some award for Best of Nouveau. We've won, but it's Echo 51 is about an alien who thinks she's the only one left on the planet, and we really get to see what she's dealing with, and then she finds out that something different is going on, and so things really rev up from that, and it's leading into a feature that we'll be working on.
Okay, okay. So we're talking science fiction.
Yeah,
here.
sci-fi, and that's something I always really like to do. But the whole series is dealing with these aliens that are doing things and sending people to multi-universes, and so just really dealing with the dynamics of what would you do in this situation, and people going through something and coming out stronger on the other side.
Oh, wow. Okay, so there's a deep message
Yeah.
underneath.
Yeah.
So when you say it's a series, so is this the first of the series? Or are there
It's
other things
actually
that
the
preceded this?
fourth in the series.
fourth in the series,
Yeah,
okay,
the first three, and we shot it all here. There's Chronicles of Nairi, then The Frozen Land, and then Nairi Reborn. And so those first three were shot. They've been to film festivals and over to Japan for distribution. And so when we came to the fourth one, we really pulled in a lot of Indiana-based production companies and said, you know, we want to make the best sci-fi that we can make. And so from that, it's really, it came out on June 29th of 2016, and it's been at film festivals and now has distribution.
Very nice, very nice. So now John Allen is the writer behind the Echo 51. So were you the writer in the other parts of the series, or and how do you all work together to make all this happen? It's interesting.
Well, no, but we started here with me writing the novelization for the film.
Okay.
And I met Demetrius at In Conjunction. It's a local pop culture sci-fi convention here in Indianapolis. And I was selling my books. I have other books that I've had published, and I saw what he was doing, and I was like, wow, this is interesting. And then I saw one of the actors, and he Bishop Stevens, and he was like, hey man, you need to meet this guy. And so I went over and met Demetrius, and we talked, and we hit it
now we have
off,
the book.
and
And now
Yeah.
we have the movie. Okay.
yeah.
So I'm the writer and director of all the film series, and so he's taken the screenplay and writing the novel off of it, and it's really done well. It really, he's fleshed out the world even more so in the book.
So then, in your case, you wrote the novel based on the screenplay, but typically, isn't it the book precedes the? Okay, that's
Right.
where. Okay.
Yeah.
Wow.
Yeah.
Right.
Yeah.
Right, a lot of times the book is the source material for a movie, but a lot of times when you have an original film, sometimes an author is hired to write the novelization for those who want to read more and get immersed or submerged, if you will, into the world.
Good. Okay. Boom, boom.
Yeah.
Okay. Grace Carlton, you are an actress and have a role in the Echo 51 of Submerge. So tell us about your role in the movie.
Well, I play Liz, and I can't really give too much away because her character is really more developed in the feature. Let's just say that she's very strong, very young, but she's becoming a leader. So there's a lot of growth happening with Liz,
Okay.
and I really enjoy it.
Okay. Okay. And so we're going to show a little snippet of the part of the trailer.
Yes.
Okay. That we'll be watching now. Is Grace in the trailer? Do you recall if she's in that part of it?
No, not this trailer.
Okay, okay. So we're going to have to find a trailer with,
Yeah,
with Grace
you're
in it.
right.
Okay.
Right.
Because we want to see what Grace is doing in the
Yes.
movie. So, okay. So, what do you experience with people in Indianapolis when they see you doing what you're doing? Because typically things like this, we all think it happens in Hollywood, but you're making it happen right here in good old Indiana.
I think a lot of people are surprised. They don't know what Indianapolis has to offer, and it offers a lot. There's so many people that I've met and networked with that are doing feature-length films with Danny Glover and different ones. They're doing it right here in Indianapolis. And when you really start to tap into the film side of things, community, you really get to see what's going on. So it's been very productive working with so many.
Okay. Were you going to add to that, John?
Yes, it's the same with writing as well. A lot of people think, your writers are all over anywhere but Indiana.
But anywhere but Indianapolis. I like
Right, right.
I love that.
Unless you're Kurt Vonnegut, you're not going to be, associated with the state. But there are a lot of writers, emerging writers, as a matter of fact. John Green, for one, who I've met, and so you've got a lot of writers in Indiana, and there's a lot to be mined here.
Okay, okay, okay. So tell me, Grace, what made you go into acting? What made you want to become a part of being on film? And of course, some people, go to stage.
If I'm being completely honest, you know that TV show Supernatural with Jensen Ackles and Jared Padalecki? I have always, it's been a dream of mine to meet them and work with them because they are by far my favorite actors. And I don't know, just ever since I was little, I would watch them and I would watch other TV shows and movies and I just loved it. And so one day while I was in Italy with my family, I played a scene from Supernatural to my mom, and my mom was like, "You're really talented." So when we settled down, I just got into theater, and then I got into film.
Okay, that's pretty cool. So she's doing her passion. And let me tell you, I love Law and Order. Don't laugh. And I have this fantasy that I'm going to be on that show sometime. I don't know how I'm getting on that show.
It's still going, so yeah.
I am so into the characters, and I think you're a news person, you're not an actress, but I understand a little bit of what you're talking about, especially when you're very young. It becomes a part of who you are. So, okay. How can we see the film? Now, does it show in Indianapolis, or is that during the, Heartland Film Festival? How can we actually, or can we get it on DVD, or you upload, or what people are doing today?
Right. Well, what we're doing right now, they can go to my website, dventertainmentpictures.com, and you can buy it. Also, we're right now getting it on Amazon Prime, so people can be able to stream it that way. Yeah, and sometimes just on our website, we'll be at different film festivals where people locally can come to see it.
Okay. Why sci-fi? And is that your area of specialty? I mean, do you go beyond? Because I have seen some of your work, and I've been watching you on Facebook, and I see what you're doing. And a lot of times it is just the sci-fi. Is that like your niche? That's what you do, or will you be going beyond that?
As a creative writer, I think you want to go beyond what you're doing to kind of challenge yourself. But yeah, sci-fi is kind of my niche. I always enjoyed watching it. Battlestar Galactica, Star Wars, all of that factors in. But also dramas and things like that. We want to touch base with that. So I'm gonna try my hand at different things. Right now, with the sci-fi, that's something that is working.
Okay, well, I appreciate you all coming in and telling us about Submerge, Echo 51. Thank you, John Allen, for writing the book. We got this good read, so check this out, Amazon.com and
Yes,
beyond.
yes,
Okay.
yes.
Thank you so much, Demetrius, John, and Grace for coming here on
Thank you
Inside
for
Indy.
having us.
Yes, thank you so much.
And thank you for joining us. I'm your host, Kelly Vaughn. We'll see you next time. Bye-bye.